Hello, hello, hello. Well, it's another WealthE Wednesday and wonderful to have Lyndon and Lee online. So thanks very much for joining us. Whereabouts in the world are both of you?
Hi, everyone.
Hi,
and
good
welcome.
afternoon, everyone. After you, Lee.
Sorry.
We've done this so many times. You really think we'd start kind of having a ritual that says I go first or you go first, but it seems like we keep talking over each other.
We're going to have paddles, and we're going to have to put them up when we want to talk. Hi, everyone. Welcome to WealthE Wednesday, our second last one for 2019, which is scary in itself, but we're excited to be sharing with you. I'm coming to you from Riyadh in Saudi Arabia. I've recently relocated here with my family, but it's great to be online from wherever you are joining us.
Yeah, great. And hello, everyone. Great to have you back again on another WealthE Wednesday. Today, I'm joining you from a wilderness area in the Eastern Cape province of South Africa. I look out my office windows and all I see is wild mountains. I'm literally in the middle of nowhere, but luckily have good internet connection.
Awesome. And so that we get engagement, we've got people from all over the world. We'd love to know where you are. And if you do that, then, we can engage. It also shows us that you know where the little chat box button is that you can actually click on. And so it'd be wonderful to know where in the world we've got different people coming in. So I see Cape Town, Zimbabwe. Where is everyone else? We got America, we got England. One from Dubai. Lee, that person probably knows you.
Senegal, that's an interesting one. We have not had a Senegalese join us yet on a WealthE Wednesday call, so welcome.
Excellent. So let's get right into it. So I always enjoy WealthE Wednesday. It's one of my fun days of the month. We're always looking at value, property, people, profit, purpose, and fun. And we always say to people that the whole intention of why we're doing this is that we're going to look at, as the world's going more digital. I think what I've learned even more so over the last week with these events we've got coming up next week is that we all like being digital, but we all like human contact. And people love to have one-to-one contact. They love to feel important. And so the whole idea with WealthE Wednesday is a consistent rhythm where people can turn up, they can meet the team, and they can learn about the different deals, what we do, why we do it, ask any questions around the due diligence and what is actually happening. They can also look at the pipeline of where things are going. Most of us are very busy. We don't have time in terms of to read all the material and stuff, so it condenses time and the ability to come together. And then also, just with regards to our platform, we are consistently bringing out new updates and new things that are happening. And if there's anything significant, we tend to talk through it in this morning session so that people can really get an idea of what is actually happening. So what we're going to be doing is this evening, we'll be looking much more detailed around Wealth 5.0. We've just run an entire webinar series which spoke about where the world is going, impact, creativity, high touch, high tech, and digital. And we ran 4 different webinar series in October. We did the 5 secrets to offshore real estate investment success. And if you want the link, that is the link that you can go to, and you can actually get access to all the recordings. My understanding, Lee, all the recordings are actually up there.
That is correct. Our community can use that link, and they can watch all 4 of the webinars that we recorded during our series.
So if I just go to that link, sorry, I've got to get the right one here, is here's what you will see. And actually it just brings up the page, and then you've got all the different webinars which are down below, and you can actually send me the recording. So everything, so that's the link of what you'll see. And the second webinar we did was how you can immigrate overseas financially or physically. So it was actually with immigration agents. The third webinar was with Hilda. We got amazing feedback on this and a real life global citizen and how they're actually doing it and what steps they take. And then the fourth one was an overwhelming amount of information and value from Garth Wellman around what the wealthiest people are doing, portfolio strategy, diversification, etc., etc. So, all of those are available. I really request people to share it with their friends and family. It was so much information, and sometimes when people don't pay, they don't pay attention. So don't believe just because it was free, it wasn't valuable. in terms of the content that has been shared. And as I said, Lee has got it up there. Then something that's a little bit exciting for us is that it is WealthE Wednesday. We've got our offshore investor breakfast next week. You know, we've got incredible value. I'm going to be starting in the morning session all around going deep into all the skills that people need to know. How do you find the right partners? How do you find the right information? We've got great partners coming out from England, actually in the aged care sector. We're going to talk about one of their deals now. They're paying a 10% cash on cash return in pounds. And having done this for 15 years, we found that the best way to build trust is actually for when the partners come out, you can meet them, you can shake their hands, you can look them in the eye, and we're going to be investigating and understanding about the different deals. And then we've also got, you know, Hilda and Garth. We're going to be running a live session where we're going to be interacting with them and actually asking questions. And that is the link to the event, wealthmigrate.online/wealth 5.0. We do have a special for today, and it's literally for today. It will close tonight at midnight GMT time. And what it is that it's a 2-for-1 special. So every WealthE Wednesday, we like to bring specials in. We like to make it exciting. And most importantly, for those of you alive, we like to make it worth your while. So what you do is you just go to that link. You decide whether you want to be a silver ticket participant, which is someone that comes to the breakfast. If you want to be a gold participant, you come to the breakfast and the VIP lunch, which is when we're going to spend time with the partners. We're going to go into their deals in more detail, etc., etc. And you literally use this code WWSilver or WWGold. I presume, Lee, it needs to be in capital letters. You'll notice I've written it in capital letters there. And just for today, you'll get a 2-for-1 special at the breakfast. Now, why are we doing this? Well, we always want to bring excitement for WealthE Wednesday. And also, I remember years ago that I actually met Hannes Dreyer this way. A reason being is that one of my friends wanted to go to an event, and by him wanting to sort of pay half the price, he got me to come along, and suddenly, you know, I sort of paid half the ticket for him, and I got incredible value out of it. And so why are we doing it is because the people that are turning up to WealthE Wednesday, not only do we want to add value to you, but we also want you to go out and speak to your network and add, you know, value to them. So that's why we're doing it. It's 2-for-1 just for today. We've got really exciting breakfast next week, and I really hope, you know, you guys are all going to participate and be part of it. Then we've got the Wealth Weekend, which is actually next weekend. We run this. It's an annual event. And this year, for the first time, we're doing a Global Wealth Masterclass. Hilda is going to be running us through the 10 sessions around wealth. You can see that it'll be around the wealth mindset, you know, knowing thyself. Are you thinking big enough? How to create the millionaire mindset, the wealth skill number 1 around business and entrepreneurship, understanding wealth, leadership, time management. Is your life balanced? You know, the wealthy habits of being healthy, happy, and longevity. How to stop making excuses, you know, mastering yourself, and then, you know, most importantly, launching yourself. We're about to go into a new decade, launching yourself into that decade, and Garth Volman is going to be joining her. This is really going to be an action-packed weekend. And, you know, I tend to say to people, the breakfasts are going to be great for the theory, getting the knowledge, but the weekend is about going to be going deep and actually leaving with a plan. And again, we want to add value to our inner circle members. And so for our inner circle members, it's equally a 2-for-1 special. So for our wealth partners, we've given them already a 2-for-1 special. But for our inner circle members, just for today, it's a 2-for-1 special equally. And Lee is going to post the code for you in the Inner Circle WhatsApp group and the Inner Circle Facebook group. So if you've got a problem, if you haven't got the code, reach out to Lee. And if you're not part of the Inner Circle or you're not a wealth partner, you can still attend the Wealth Weekend and the Global Wealth Masterclass, but you will pay the normal price of $995 for the weekend, which, you know, quite frankly sounds like a lot of money, but it's a drop in the ocean in terms of you preparing yourself and how much value is your future self. So what we're going to be going through tonight is we're going to be going through the 12 key principles which are paramount to success. So it's around success and wealth, and we're going to be going into it in a lot of detail. And I'm really excited. I've put the webinar together, and yeah, a lot of value to add there. And you know, I love the learning sessions. But without further ado, Lyndon, it's time to get into the deals. unless anyone has any questions or anything that they want to ask, I'd like to swap screens probably over to yourself as we run through the current deals that are on the platform, whether there's any new UX details. Just before we do that, or to be honest, while we're doing that, I'll start moving the screen over to yourself. Lee, is there anything, or Lyndon, is there anything that I've missed out which are updates with regards to the community, the events next week, the breakfast, the Wealth Weekend, or anything else that I need to talk about before we move into the deals?
No, Scott, I think that you've covered it all. So we just look forward to seeing everybody at our events and our Wealth Weekend.
Great, and while Lyndon's pulling that up, it's interesting on the interview with Hilda 2 weeks ago now, she said, she's learned that the three most important things for someone to be successful is that they've got to be in the right community, they've got to have the right team, and they've got to show up. And it's really interesting because the whole WealthE Wednesday, the circle, the globe, our wealth partners, and even the breakfasts, and even better, the weekend, is all around community. And it's about growing people. It's about them becoming. It's about like-minded people growing together and becoming global citizens. And then the second part is growing your team. And the best part about being at the breakfast and/or the weekend next is that we're going to have our partners there. You'll actually be able to meet them face to face and engage with them, and they are your team. And the third part is that most people in life want to be successful, but they're not prepared to show up. And so really, Lee will put the links in the chat box now with those discount codes, and it's only open for today at a 2-for-1 in terms of being able to show up. Over to you, Lyndon.
Great, Scott. I'm confirming you guys can see the screen with the marketplace on it.
Yep, we got you live.
Brilliant. So let's go through the deals that are currently live. Maybe it's worth me just dropping down and having a look. All these ones with the red flags on it, that's to indicate that these are deals that we've closed in the last month or two. So as you can see, it's been a busy 2 months. We've closed 6 phenomenal deals over the last 2 months on the Wealth Migrate platform. And the 4 deals that we currently have, yeah.
Can I suggest we just switch off our webcams while we do this so we can see your full screen?
Yeah, absolutely. I'm happy to do that.
Yep.
All right, perfect. So once again, confirming you can see the full screen.
Yep.
All right, brilliant. So we've got 4 deals we want to talk through today. 3 of them are brand new. The one is an interesting deal, and let's go straight there, Scott, as our market commentator. The IPS deal of 267 Upper Grosvenor Road. Now, this had a fantastic, or a very interesting story because it really, I think, explains how we work with partners to maximize value for our investors. So this deal we originally put onto the platform about 6 months ago, and IPS, it's a very simple deal. It's a building with 3 residential flats in it. And as we were working through, as IPS was working through the deals, they realized that they could actually get far more value for the deal, potentially on the exit, with more different exit strategies, if they made each flat a completely separate unit, so that if they wanted to in the future, they could sell it off separately. And to do that, they had to go back to the mortgage, the person who was offering the loan, and renegotiate so that they could have it under a separate structure. So what this effectively meant is it delayed us closing the deal for the last 3 to 4 months. With IPS, but the rationale for it was that it's likely to give the investors a much better return in the 3 to 4 years time when it looks to exit. What's happened in the meantime is that one of the investors who was in this deal and had to raise the money, they couldn't deliver their final amount, and so there's now a final amount that's still available for an investor. This is a very last minute opportunity. We are literally closing this deal in 2 weeks' time, done and dusted. All the legals that IPS are working with the lender have now been done and completed, and we are finally ready to do it. And we are very happy to say with the new structuring, so that it does give us far more potential on the back end when this deal exits, for them to be able to sell it individually or as a collective, but it gives that much flexibility. So that's why it has reappeared after officially closing 3 or 4 months ago. Scott, I know this is a part of the world that you're very passionate about and a kind of asset class that you really like. Your comments on the Upper Grosvenor Road deal?
Yeah, so let's talk through, tonight we're going to be going through the seven, we're going to be going through the principles, and one of them is the fundamentals of investing, and there's 7 laws to investing. One of them is that you make your money when you buy. And so, although the delay of 2 months or so, like you just said, is quite frustrating for us investors, it's far better upfront to get the deal set up right than to try to do it in 5 years' time and have to pay stamp duty and all that. So when you purchase, you make money. One of the 7 laws is that you make money when you invest. The second law is that it's all about income. So the reason I like this building is because it's actually 3 separate income streams on 3 separate titles. And so, if you have a tenant that leaves, it doesn't actually impact the income. And for me, that's really critically important, which is the second. And the third is you've always got to have an exit strategy. And so what's really interesting is that a lot of investors, when they invest, they don't think about what the exit strategy is. Now, if we have a building that's a 3-story building with 3 flats that's earning a great income return, as a matter of interest, Lyndon, who do you think that you will sell that building to if it's purely an income returning asset? It's an investment, basically. Who do you think you'll sell it to?
I would answer that it's probably everyone. It's who wouldn't you sell it to? If you've got an income earning asset.
So what's interesting is that I get where you're coming from, but in real terms, the person you are going to sell it to will be another investor. It'll be someone that is looking at it as an asset and what are the income returns. And so you're going to get into an arm wrestle of the yield, the price, and what someone's willing to pay for it based on the return. By us splitting it up into 3 separate flats, it allows us with time to sell off those flats as individual apartments to home buyers. And a home buyer does not buy a house with a financial calculation in their head. If any of you have bought a house, which I'm sure many of you have, there's a much more there's much more emotional involved than financial. And so you tend to get far better value. And by doing it and by splitting up the property into 3 separate titles, it'll allow us to be able to sell those 3 properties as 3 separate titles. And then you're basically dealing with homeowners, and you're dealing with people, it's going to be a husband and a wife, a newly married couple or something that are trying to get on the property market. They fall in love with the area. They want their kids to go to a good school, and they basically pay what they have to get the properties they want. And so it's another one of the laws of investing is what is your exit strategy. And so again, a bit of pain up front, but it allows us a lot more flexibility in the long term in terms of actually being able to exit this property. So for me, to be able to get into the London residential market, it's a great area. It's 30 minutes, direct train from Tunbridge directly into London Bridge. It's a couple of minutes walk, so it fulfills my, within 10 minutes of the station, it's like 2 minutes to the station. And I've actually been to this property personally. And what I also like about it is we know the seller, we know why they're selling. They've immigrated to America, and they want to put all their assets into America now. So you're not buying a massive problem. We know the income streams, we know the consistency. We believe we're getting it at a good price because of Brexit in terms of the returns. And coming back to what Lyndon said, is that we've had one investor that had actually committed 20,000, and it's one of the biggest challenges we got with our current system, is that you want to be able to honor people, and when they commit their money, you don't want to, it's not like an airplane where you can fill it up, 120%, and when people turn up, it's like, oh, sorry for you, the plane's full, you just have to fly tomorrow. When it comes to investing, people get pretty nasty about this actually. So we need X amount of money, and someone says they're good for $20,000. We take it as gospel, and yet we've now called final payments for everyone. In fact, all the money's sitting in the trust account ready to close. And look, the good news is the deal will close anyway, because actually we'll just fund the difference in terms of closing the deal. But for a last minute opportunity for an investor to be able to take advantage, what we have done is that we've broken that 20,000 into a couple of chunks. There's going to be one chunk of $10,000. There's going to be one at 5,000, and there's going to be 5 at 1,000. So because it's WealthE Wednesday, we're allowing people to get involved from $1,000, and people will be able to participate. Obviously, if someone wants it at 20,000, you know, done. And it's basically first come, first serve in terms of people being able to participate. But you know, this has been a real challenge actually getting this property, and particularly getting the mortgage. And I think, you know, just for people's purposes, I actually, you know, thought I would get the mortgage originally because I really liked the property. And the problem we had, you know, I'm a British citizen, I've got a British passport, I've been investing in England since 2002, and yet the best rate I could get, Lyndon, if I remember rightly, was base plus 4.5%, which would put us on a floating rate somewhere between 6.5%, which is very expensive by English standards, and quite frankly is higher than commercial finance. And yet by working with OPM, other people's mortgages, not money, other people's mortgages, we were able to partner with a local British person on the ground, a property investor, and they've managed to get us the mortgage. And you know, it's at I can't remember the exact rate, but it's like 3.23%, so it's less than half cost of capital, which is where and why we're seeing the return. So yeah, a unique opportunity to get into the London residential market, and you know, it won't be around for long. As Lyndon says, we're literally closing next week with or without that 20,000.
Yeah, great. Thanks, Scott. And you know, if you have a look at all these deals, both the ones that are open as well as the ones that are closed, what will stand out for you about that particular deal is it's the only one we've got where it was a commercial deal. In other words, it's all about a commercial investment, and yet at the same time it was playing in the residential space. So in terms of diversifying your portfolio, you'll see the other deals we have at the moment are office blocks, medical, and aged care. Yet this particular deal is very much in the space of a residential play. So it's diversifying your portfolio, a great opportunity on the Wealth Migrate platform to be able to do that. I want to jump straight into the next deal, deal based out of the US. Yep.
So just before you go into the next deal, you know, to get into the London residential market is extremely difficult, you know, and this just provides people with a unique opportunity, sometimes from an aspirational perspective. You know, people want to be able to say they've got a place in London and get the foot on the door. And this is a fantastic way to dip your toe and get going, you know, in the London market.
Brilliant. Jumping into Atlanta Portfolio Medical 24. So this deal is brought to us by the sponsor Orbvest Investments. Many of you are familiar with Orbvest. We have a huge investment history with Orbvest. They've brought, I think it's now their 8th or 9th deal onto the Wealth Migrate platform. So it's a sponsor that we know well, and I think many of our investors know well. For those of you who do not know Orbvest, they are a niche player. They really focus on medical buildings, on medical office buildings in the United States, and even more niche, they're particular are in the areas Texas. Scott, do you know they're outside of Texas? I do know they do, but my brain right now has just lost the other state that they tend to focus in.
Atlanta, Georgia, and Texas.
Great, thank you, Georgia. That's what I was looking for. So Georgia and Texas are the two where they have a very strong presence on the ground in terms of people looking out for opportunities. Now, this particular deal is an interesting one because it includes the opportunity is really about going back to another deal, Medical 3, that is closing. Sorry, Medical 1 is Medical 3 is closing. I get so confused with the Orbvest numbers, so my apologies. The Medical 1 investment is closed, and there is an existing investment.
Let me explain it. I did the due diligence on these buildings. I've flown to these buildings. I've been on the ground in this building, and I invested in this building. So what we've done is that everyone always asks us, and they said to us, how do we exit the building? And everyone always wants to know what the exit strategy is. And so what's really interesting for me is that over the years and in the different countries, the more sophisticated someone is, the longer they want to hold a building for, and the less sophisticated they are, the shorter they want to hold it for. And that's not a South African thing, it's not a Chinese thing, it's worldwide. So what's really interesting for us is that we bought the buildings on a time frame of 5 years. And some of the investors, and a couple of investors invested $1 million plus, they actually came back to us and said, why 5 years? That's too short. You know, if you're buying a good asset and it's earning a good return, why would you sell it? And yet on the other side of the fence, you have investors going, 5 years is like my lifetime. When do I get my money back? And so we set a 5-year time limit to have a liquidity event. And we reached that 5 years because we bought these buildings back in 2014. And so what we did is we went back to the investors and we said, right, those who want to stay in the building, those who want to hold in the building can. And as I understand it, you know, a large percentage of people actually have chosen to do that. I don't know the exact number, but somewhere between 70 and 80%. And what we'll do is that those that want to exit will exit. However, we want to join together Medical 3 and Medical 1 as to make it a bigger portfolio that is a balance between capital growth and income. And that's where Medical 24 has come about, so that new investors can participate in existing assets that we already own, but we're providing a liquidity event at current day market valuations for the people that want to exit. And we would do the same thing in 5 years if people want to, you know, keep staying in an asset. You know, when you've got a really good quality asset, why sell it?
Great, thanks, Scott. So that's a great question. Why sell it? And maybe that brings us on to our risk categories, because we haven't really spoken about these today, and we might have new investors. You'll note that this deals in a space called Core Plus, and what that means, if we do a very rapid tour through the risk categories, a core deal is a established building in a very sought after area with a blue chip client on a long-term lease. So your risk is very small. However, because the risk is small and you've already got an established tenant, you're probably going to pay a lot for the building. So your return on what you paid is relatively low. The next level up is a Core Plus, which is an existing building as well, but there's something that's maybe not as blue chip as the core. It might not be in the same environment, or your tenant, while still being very solid, might not be one of the Fortune 500 companies. So you can get the building at a slightly better price. It's still a very low risk enterprise, but because you've paid less than a core, you're getting a slightly better return on the investment. Next up the list is value add. And in this case, there's the sponsor who has brought us the deal, the investment manager, the asset manager, has a look and says, we think there's an opportunity here to change something about the dynamic, something about the business model, either to do renovations and through that improve the value of the building, or to do renovations and through that improve the rental we can get, or change the existing tenants so that we get tenants in who pay better. And all of those have a slightly more risk because it's a change you're going to make to the business model. And while you're pretty confident, you're not 100% sure all the time. So when you're buying that kind of building, because there's slightly more risk, you get it at a better price, but because your price is better, you're getting a better return. And then lastly is opportunistic. This is where there's probably either no building at all, so you're going into a brand new development, and that always has risk, both in terms of how long it takes and whether there will be a market for what you built, or where the building has a significant problem and it's only through major change, major renovations, knocking it down or redesigning it, that you will make the business model better. But because that is a longer term journey, and also because you've got far more risk, you can get those at a much better opportunity price, and therefore your return on the price you paid is less. Now, to come to Scott's point,
also new development as an example.
Correct. So now to come to Scott's point around why would you want to sell, the more you are to the left of this equation, probably the longer you want to hold on to the building. So if you own a 100% blue chip building in the middle of New York City that is rented, got a tenant for 20 years, and there's just a slight escalation in the rental, that's a secure, you're not going to lose your money, your rentals will be there, you'll make a little bit of money. There's no point in selling. The more you move to the right, the more you are able to realize the value of the asset at the point of sale. So for example, if you've bought a building, you've got some tenants in it, you change something about the building so that you're getting a better tenant base, you therefore getting more income, therefore you can sell the building at a much higher value. You want to release that value. And when we speak to our sponsors and we ask them for what is their sweet spot, if they are offering a core plus or a value add building, they normally say 3 to 5 years. That it's within a 3 to 5 year time period that they can maximize the changes they need to do to the business model, to the building, or to the tenant role. And then as soon as they've done that, to be able to exit and get that value that they've added back to the investors. And Scott's right, when you're having a look at this particular deal, it probably sits between core and core plus. It's existing tenants. There's not that much value add to be done. It's the tenants who are there, they know what they're there for. You can maybe increase the length of your contract with them so that they have along there, which is their plan here, with the Department of Veteran Affairs, which is a major tenant, and they are now about to change a 1-year lease into I understand it to be close to a 10-year lease. So you're adding value a little bit.
Just to explain that, so we like buying those buildings, and I use the word, we, because this was many years ago, and basically the vets are the American Army, and so there are hospitals that are created by the American Army for war veterans that they're able to use. Now, during the whole change to the Donald Trump and all the challenges they had in the administration, is that the government leases, they were only allowed to sign 1-year leases at a time. And I mean, we've had those buildings, and they've been amazing. And when I say I'm talking as an investor. I own, I put my money into the buildings. And then what's interesting is that as there's more stability, I mean, there's very little chance of you losing them as a tenant, because it's a government, it's they call the VA clinics, and it's where people go. It's like any medical premises. They've got all the equipment and everything there. And now they all based on them on negotiating, the partner on the ground, SG Properties, are negotiating with the VA to effectively extend that lease to a 10-year, like you said, Lyndon. And that's a classic example of core plus, and it's another one of the reasons why the intention is not to sell the asset, because you can create real value over the next year or two, having a 10-year lease in place versus having a 1-year lease in place.
Yep. So Scott, what's interesting for me about this deal is that the existing investors in Medical 3 have the opportunity to remain in, and therefore, they're just continuing. The new investors are getting a slightly different proposition. They are really entering at the timing where that value add becomes possible, where you are now going to negotiate longer term leases. And so your timing, if you enter into this opportunity now, is perfect in terms of being able to maximize that value add piece. And that's why I think the suggestion from Orbest on this is they may even try and sell this shorter than the 3-year time period. They might try and get out within 2 years, purely because the cycle of this particular deal has run through its 3 to 5 years for those who are already in it. And there's this exciting opportunity for another 2 years to really significantly up the value add. And then there's a great opportunity to get out at a very good time in 2 to 3 years' time. So when we ran our webinar with them last week, it was a great webinar. They went through this in detail, and the expectation here is that 3 years is probably on the long term. They're probably looking more at a 2-year exit strategy around this.
There's one thing that's important here, because particularly for new investors, it does give them some understanding as well. Is that if you've got a great asset, you never lose money unless you sell an asset. Okay, and what I mean by that is that this is a classic example of how the deals have been structured, where if it makes sense to keep a deal, the investors can do that, and yet also you want the other side of the fence to provide liquidity for those that want to exit. So with complete transparency, people can, the existing investors can exit, and or they can stay in and really take advantage of what is happening and where the market is. And equally, like you've said, to reiterate what you've said, is that allows new investors to be able to get in an existing asset that we know very well. We know the income streams, we know the risk, but equally we know the upside and the value add opportunity that's going to be played out here. And by the way, if this building doesn't look sexy in the picture, trust me, if you ever go and see it, or you see the drone footage or whatever, it will seriously enhance your ego. When I invested in this 5 years ago, I never thought in all my wildest dreams that I'd be owning a commercial building that was this fancy.
There we go. So as usual, Scott, you and I have gone straight into a very deep discussion around the real estate, the asset, in a way, quite a technical conversation around the deal, which is great for our established investors. If you're a new investor, I hope we didn't lose you along the way. But if you're a new investor, what I do want to take you through very quickly is, well, how do you invest on the WealthE Wednesday platform? And literally, what's important is you'll see I've logged in here as a demo user. And if you have come onto the WealthE Migrate platform, this is a very important little button here, because this, if it's green, it's giving you the go-ahead that you are able to invest. If it is still orange or red, it means you have not yet completed verifying your identity. And because WealthE Migrate is a regulated environment, we cannot take funds or investors who have not yet gone through a Know Your Client identification journey. So the first thing you'll need to check is just to make sure that button is green. If it is green, you will see the Invest in this Deal button. However, if it is not green, this button will not be here for you. So that's key. If you're having a look at this and there's not this button, then it's because you have not yet been verified. The investment process is very simple. You click on the Invest in this Deal. If you have been verified, it asks you to confirm how much you are wanting to pledge in your deal. There are fees, and it'll explain very clearly that what the fees are that will need to be paid. If you would like more information on how those fees are made up, you can go and have a look at the information. We also have a great help article on our fee structure, which you can go and find on our platform. And then once you're done, you click Next. And
just on the fees though, Lyndon, I do think it's important just to touch on it. You know, we did originally have a private equity model with a sort of what they call a 2 and 20 and a waterfall and a carry and everything. And I always joke, my brother's a very intelligent doctor. He's an anesthetist, but he's never heard of what a waterfall and a carry and all this, you know, funny lingo is, hurdle rates, etc. And so we decided to copy the Airbnb model, which is a very simple, straightforward, where it's no more than 3%. People understand that, they can do the calculation. There's trust, there's transparency, it's easy. And I just want to, you know, let people know that from a fee perspective, you know, it's very easy for people to understand how we're making money, what we're making money on, and we pretty much copied Airbnb in terms of how they do that. So sorry, back to you.
Brilliant, thanks, Scott. Once you've done that, you'll come through to this WealthE Migrate agreements piece. Now, these three things that you're acknowledging are really important because they're at the heart of the WealthE Migrate philosophy. We are not a fund. How a fund works is you give us your money and we decide how you invest it. And that is not within our belief system. We are here to educate and empower investors so that they have the information that they can make their own decisions. It's at the heart of Wealth University and our education program. It's at the heart of why we run these webinars, so that we are giving you the information that you can then go and make your own decisions. And this is why you first will need to just state quite clearly that these are decisions that you have made, and it's not WealthE Migrate investing on your behalf. You can download the agreements, the legal agreements that bind us and yourselves into these deals. You can also download any of the documentation from the deal, the brochures. Once you're done, you click the I agree button, and it will take you through to the next stage, which will give you the bank details for the process. So that's a quick overview of the investment process. Please, if you've got any questions, please drop them into the question box, and we will be happy to answer them for you. Let's turn back to the...
Sorry, one other comment I got, and you said, you know, if people are new investors and we might lose them. Just remember that the way we've set it up is that the lunchtime session is what I'm going to refer to as the more advanced session, where we're literally going through deals, we're talking about deals, you know, that's what it is. And then the evening session is more of a learning session, and where people can, you know, ask any questions they want, we call it Ask Scott Anything, you know, etc. Now, don't get me wrong, people can ask whatever they want now, but the lunch session is always, you know, it is supposed to be, you know, advanced and you know, we want to talk about deals, you know, so that people know they can come talk about deals, you know.
Great, thanks, Scott. Let's move on to the next deal. Currently available on the WealthE Migrate platform, 2 Forest Plaza, Medical 26. This is a unique scenario. This is the first time that we've had a sponsor with 2 deals at the same time. And in a way, the reason they Allbest have brought 2 deals at the same time is this deal came along and it was too good for them not to say yes to. It has put them under some great pressure because now they have to make sure they're raising the funds to close them both. But I think they're a very conservative sponsor. We have seen that over the years, that they tend to be very conservative really trying to protect clients' money. So for them to have taken the decision to bring this on at the same time as another one, I think shows that they really, really believe in this deal. Now, every now and then at Wealth Migrate, we often speak about a trophy deal. And what that is it's a deal that not only has good numbers, so in other words, it's not only a good data decision, but it's also a great deal from an emotional, almost bragging rights, that you can whip out your Wealth Migrate, your phone, and put on Wealth Migrate. And if this is part of your portfolio, you can really open it up and say, wow, look at this, I own a piece of this building. Because it really is a beautiful building in a highly sought after area of Dallas. The entire space is very modern, as they say here, from an energy, logistically, a superb opportunity. In an extremely actively growing area of Dallas, the Sun Belt. If you were on the webinar last week, they took us through the actual area, showed us how all the areas around it had expansion plans, where the highways were, the access to the different areas, and very, very close to the Medical City campus. Now, why that's important is because that is one of their strategies here to add value. Is at the moment, there are quite a few of the tenants who are not medical, and being a niche medical space investor, Orbvest is very keen to start switching some of those tenants out, because medical tenants are a much better tenant class. And Scott, maybe you want to comment on just the medical aspect of a tenant and why we like medical tenants and why Orbvest have niched in this area.
Yeah, look, it's so interesting because sometimes people might have heard the story 1,000 times, but I always say to people, in 2009, I'd helped 2,500 people buy a house or an apartment. And then we're right in the middle of the crash. And I remember talking to these two very wealthy people. And I said, what are you investing in? And they said, medical buildings. And I thought to myself, well, why medical? I've got 2 degrees. No one had ever taught me this stuff. And I said, why medical? And they said, well, think about it. No matter what happens in the global economy, people need doctors. I was like, that makes perfect sense. Secondly, doctors never leave their premises. I've already mentioned that about the VA clinic. And I mean, literally, think back to your childhood, and I virtually guarantee you, in my case, the doctors passed on, but the medical premises are still very much alive and well. And the third thing is the doctors are very good at being doctors, but they're not necessarily accountants, and so they sign very good long-term leases. And so, just at a very simple common sense level, I was like, that is an absolute no-brainer. Why has no one ever taught me that? And ever since then, have been hell-bent on not only investing in medical myself, but working with partners that really understand the space so that we could help other people invest. And over time, added to that, and obviously we've got a deep understanding now. We've done hundreds of millions of dollars with sponsors in America and in England and Australia in the sector. And what's interesting is that it's also a very good long-term trend. There's a lot of baby boomers that are all hitting retirement now. Medical expenses are going up around the world, particularly in the first world. And there's a real lack of medical and aged care, and so you've got a very good long-term trend as well, which is incredibly good for us. And I suppose the last thing I would say from a risk perspective, Lyndon, is that when I first started traveling America in 2010 to buy property, it was right in the heart of the crash, and I couldn't find an American that I could trust, and I actually left with my tail between my legs. And I came back in 2012, and we started finding people we could trust. And when we finally found partners in the medical sector we could trust, one of the things I found fascinating was that they actually, I asked them, what was the impact of the crash on them? And where residential property had lost anywhere from 40 to 70%, they didn't lose one tenant. And that's really important because, with where the world's going, medical, aged care, residential opportunities like the London one, they all provide very stable income streams. And that's exactly, I'm going to talk about this a lot more tonight, but that's exactly what you've got to be investing in, because they're economically resilient, which is exactly what you need when the world is changing. So sorry, it's probably a longer answer than you wanted, but I'm very passionate about finding opportunities and niches within the property market where you've got sustainable passive income.
Great, thanks, Scott. And what you'll notice on this deal is that the risk category we have assigned to it is the value add. As we've mentioned, in the previous explanation, the value add, there's something about the business model that they're going to be changing, they're going to be adding to. And in particular, the play here is that there are some of the leases that will soon be expiring, and those are conventional office leases. And as a sponsor with a particular medical history, they know and are able to attract medical tenants. And it is by doing that that they are going to add to that rent roll by, as they say here at the bottom, between 15 to 20% the market value that they think they can get from medical tenants. But because it is a shift, there is a change, there is a risk that they might not necessarily be able to get that as much. And that's why it does sit slightly here on the value add in a theoretical space. Once again, we are very confident that Allbest has a huge record behind them of being able to deliver in terms of their other buildings and deliver those returns. So this is a great opportunity. As we said, it's a trophy asset. There is a total of about $4 million available for investment. We do know that there are a few institutional investors who are taking fairly large chunks out of that as we speak at the moment. We're expecting both this deal and Medical 24 to be closing in the next 2 to 3 weeks. So even though I think they will close ahead of time because there is a strong demand for both of these deals, not only from our investors, but we have a few big institutions very interested in taking out big pieces of these opportunities. And with that, I want to move on to our last deal. Yes, Lee.
Sorry, I just wanted to let everyone know that you've spoken about our webinar that we had with Allbest last week, and I have popped the recording link into the chat box. So if anyone wants to find out the details directly from Allbest when we had our webinar with them, you're welcome to head across there.
Brilliant, thanks, Lee.
Or you can just go to one of our social media pages, you know, where it's on. And yeah, you know, it's. I mean, you've got all our details. Reach out to us if you're watching the recording and you want to get that recording.
Brilliant. And what I want to do is take this break very quickly to have a chat about Claudia's question. Claudia, thanks for sending you through your question. Your question is: we've got to leave so much private information online. How is your website secured that the information is safe? That's a fantastic question. One of the first things that WealthE Migrate did about 12 months ago, when we knew we were going to be building a new platform, is we went and found some of the best technical development resources that were available, and we poached. In particular, there are 3 or 4 of our technical team that have worked on a multi-billion-dollar investment platforms, and specifically the architecture piece of those platforms. Now, what the architecture piece means,
it's like $13 trillion a year or something ridiculous moves through the platform.
Correct. And what that means is that the architecture at the back is how you've designed your system so that it is incredibly secure. We also partner in terms of where the data sits. We partner with Azure, which is a break-off of Microsoft, and they hold the data for many of the world's major corporations that deal with financial transactions. So firstly, they have an obligation to protect their system. And then from our side, we have built in multiple security breach protection mechanisms to make sure our data is not available or can be broken. We do our own attempts on a regular basis to try and get in and crack it. And we get reports back on that in terms of where there might be any vulnerabilities. So in terms of protecting client information, we are extremely diligent, extremely vigilant. We take that extremely seriously. And our head of IT, Gavin, is one of those people who just pays attention to detail and detail and detail. And he makes sure and actually reminds us a lot of the time whenever there is something that we need to be thinking about to increase that security. So there are some things at night that keep me awake, and particularly when we're getting close to a deal closing and I want to make sure I've got everything ready, but our data security is not one of those things that ever keeps me awake at night, I'm very happy to say. And so Claudia, I hope that answered your question. If you do have any more follow-up questions, please just drop it in the box and I'll make sure I can deal with that. Let's go on to the last deal, which is RB Care Homes. This is a second deal that is being brought to us by RB Care Homes. RB Care Homes, we have brought on our first deal with them 3 to 4 months ago. We closed it literally 2 weeks ago and are very excited that the next deal was, the next opportunity was ready. As Scott mentioned at the beginning of the webinar, this is a phenomenal return, 10% guaranteed rental on your investment that gets paid quarterly. So it's a 10% over the year, but they pay the dividend in quarterly installments. It's a 3-year opportunity, and there is a guaranteed buyback at the end of the 3rd year. So the exit is guaranteed by RB Care Homes, that they will make sure that the investment is bought back at a 3% annual increase, so a total of 9%. Now, what's really important about this deal is it's not about that capital gain at the end. It is fundamentally an income generating asset where you know you're getting 10% per or annualized on a regular return basis. Scott, I know you've mentioned it before, but how often have you heard of a 10% return deal on this kind of timeline in pounds?
No, I haven't. So I've been investing in England since 2002. I've invested everywhere from London, central London. I've even invested way up north in the, sort of on the borders of Scotland. And what tended to happen was I was always told, if you go up north, you might get 8, 9, even more, 10, 11%. And it's just not the truth, because it's what I call a paper yield versus a real yield. Because actually you've got lower class tenants and there's a lot of vacancies, a lot of breakages, etc. It just doesn't work. I have got really good returns myself in what I call multi-tenant. So it's where you take a house and you've got 4 or 5 bedrooms and you put multiple different tenants in those properties. But that's, it's very hands-on. You've got to physically, be there, and actually the rules have changed quite a lot in they call them HMOs, house of multiple occupancies. So to get a 10% return in pounds is virtually unheard of, particularly what's important from a risk perspective. We're going to talk a lot tonight about risk correlation and making sure that the asymmetric risk reward. And what's interesting here is that people say, well, how's it possible? And, these guys have been running care homes now for nearly 20 years. They've got over 17 care homes that they're already operating. And one of our investors got hold of us and said, there's quite a lot of dirty tricks out in the market. And we grilled them hard, and that's what people are doing. They're trying to buy or develop buildings and then sort of claim them to be care homes, whereas this is not the play here. This is where it's an existing building and they get government leases. In fact, they get 80% of their funding from the government and only 20% from private capital, and then it's got government leases. And I tend to always say to people, people are worried about Brexit and is it going to happen, isn't going to happen. One thing I can safely say about Brexit is they're not going to kick old people onto the street. And so, you've got medical, which is an incredibly strong sector because people, don't leave, or doctors don't leave their premises. But aged care probably goes to even another level because it's, emotionally, it's virtually impossible for it to move. And so, I find it very interesting, Lyndon. It very much is a passive income play. It's also very easily and understandable. They focus on people with Alzheimer's and their special dementia, etc., which is their speciality. And they've got a long track record of delivery. And really what people are understanding is that they're investing in a building. There's a government lease in place and you're getting paid a return. And I suppose I'll come back to you now, but I'm really excited. I was really interested in the webinars I've done with them, the podcasts that I've done with them, to understand them better myself. And what I'm really excited about is they're actually coming out next week to be part of our offshore investor breakfast, which we're running around South Africa. And people can really come along and interrogate them. If it sounds too good to be true, great, come and ask them the questions. I know we've done, asked them a lot of very difficult questions, and I've always been very impressed with their quality of answers.
Yeah, so I think it's worth having a chat around how they do this. And there are 2 real strategies to their ability to deliver. So as you said, Scott, 80% of their rooms are from government. So what this means is that in the UK, if you are not able to afford your own private care for when you get dementia or Alzheimer's, there's an obligation on the government through policy that they need to provide a care home for anyone. So firstly, that requires them to have these care homes available that they can put people into. And now there are waiting lists for government paid for care homes. And so that is one of the niches where, as you said, about 80% of the rooms in each of their care homes is funded through these government processes, either at a local level or through a national authority. But that is a fundamental starting point. The second thing that they're very smart on, and you're right, whenever you talk to this group, you really do get a sense of them having run this many times. They've got it down to a very fine model. And at the heart of this is that they've understood that the amount you will get paid to put someone into a care home from the state does not change whether you're in London or a less populated, more rural area. So if you're going to buy a building, and once again, it comes back, if you think about our conversation earlier about the risk, if you have to buy a care home in London, it's probably going to cost you a lot of money, but you will still get the same amount for that room that if you have bought a care home in a place where you can get the building for a lot cheaper. And that's at the heart of what they do. They do not go and buy care homes in the expensive, highly sought after areas. They buy them where they can get a really great deal on the building. And in exchange, the returns you get for that purchase price are phenomenal. And that's what enables them to do these two. So it's a combination of having authorities paying for people to be in their care homes, and then making sure that they are purchasing the right building at the right purchase price so that the returns are really phenomenal based on their purchase price. So that's at the heart of what they do. You'll notice it's a core plus in terms of risk. There's not much risk in terms of their business model. Even if someone does move out, they always keep 20 to 30 of the rooms in their own name, which means, and they are committed because they've got a guaranteed rental. They are committed that, for example, say someone moves out of a room, and for that month they do not get someone to replace them, that will be coming off their portion of the combined rental, and they will still guarantee to pay the investors their 10%. So a really exciting opportunity. We're very excited to have their second deal on the Wealth Migrate platform. The last thing I want to say about this particular opportunity is that for us, the national, there's, depending on where the care home is, either in Wales or in England, the national regulator of these care homes actually has public reports where you can log into their system and say, please give me your latest check when you went to this particular care home and did an evaluation of the quality of the service, whether it was functioning properly. And on these deals, we do go and have a look at those reports to make sure that everything is 100% and operating smoothly. And those reports are coming through very well. This is a group who knows how to deliver great care to the people who need it. So we're very excited. This deal, we will probably be closing towards the end of November, unless we reach our investment. This one, I think we are targeting $500,000 US. If we hit that before then, we will close it quickly to get the investors' money working for them as soon as possible. So I would not wait on this. We have got a few fairly large investors at the moment in the process of transferring money into this opportunity. We do expect to hit that before the end of the month. So if you are interested in these deals, I would certainly get your money in. That's really it from the marketplace. If you have sat here and you've gone, wow, those are 4 deals, each of them sound great. What do I do? Well, our strategies that we normally advise is diversification. You know, you've got opportunities here across 2 different countries and 2 different underlying asset currencies. You've got medical, you've got residential, and you've got care home. Fantastic opportunity if you can't make up your mind to diversify and further diversify your portfolio. That's at the heart of the Wealth Migrate principle, is that because we have brought the price down of investing in a particular deal, you can take whatever funds you have available and spread them out rather than having to put one chunky number into a particular deal, unless you want to. Absolutely, it's the investor's choice. And with that, Lee, let's just double check with you. Are there any further questions that have come through that we need to answer? I see we are on the hour. And if there are no more questions, let's pass over to Scott.
Yeah, I was going to say, can I steal back the screen and maybe we bring back our webcams?
Sure.
Okay, let me just check what you're seeing here.
So Scott, we see your slideshow, but it's in not yet in slideshow mode.
Yep, no, I got it. Cool. So let's just wrap up for today. You know, we ask the question all the time about being a global citizen. My question is, what are you doing to be ready? You know, literally, we've got this opportunity, if you're in South Africa, to be at the events next week. If you're elsewhere in the world, we're planning on doing it around the world, you know, next year. But if you're in South Africa, now's your time, you know, in terms of that opportunity and what is happening. We've been through the deals. You know, this is just a slide. I'm not gonna go back to it, but just to remind you, we've got that London residential opportunity. There's literally, you know, it's closing next week, and we've got a $20,000 slot from one person that hasn't delivered. By the way, in the future, we'll have social proofing for that type of thing, and that person will go to the back of the queue. But anyway, that's a separate conversation. We've got the 2 medical deals that Lyndon's been through in detail, one in Atlanta, one in Texas. And we've also got the RB Care Homes deal, which is live in England, which is great. And you know what's fantastic is that, as we mentioned, the partners are actually going to be here next week. You know, the RB Care Homes guys, and you can come out and you can meet them in terms of that process. So you've got the ability to participate on WealthE Wednesday, and remember that our minimums are always dropped on WealthE Wednesday to $1,000. So today is the only day that you can participate at $1,000, and so get involved if it's something you're interested in. And obviously there are different slots at higher levels. If you're wanting to participate in the inner circle, we also always do a discount for the inner circle. And so just type in there inner circle, and Lee will be able to get back to you and assist you with regards to that. And then most importantly, we've been through the breakfast. You know, what is going to happen? Like I said to you, I'm going to be running a session. If you are new, you know, very detailed session on everything around information, partners, managing risk, diversification, which countries are best to invest in, how to get wealth preservation, the impact of currency, foreign passports, how to become a global citizen, etc., etc., etc. It's all on that website. You can go and read it. I don't need to plagiarize and read it all to you. And most importantly, where are the big trends? You know, how do you know where to invest and what to invest in? And then we want to tap into some of the secrets of what the wealthy are doing to invest. And then we're going to be running a session with Hilda and Garth, where we're going to be going deep into what it means to be a global citizen. What is portfolio? How do you build a portfolio? You know, is it good to invest in South Africa or offshore? What about tax and structuring? You know, how does one immigrate? You know, et cetera, et cetera. And then we're going to have sessions with our partners where, you know, we're actually going to go into detail. So for those that are gold tickets, we're going to be going into more detail with the partners and having a VIP lunch with a Q&A with them. So basically what you've got is that a silver ticket gets you breakfast, and you go through the whole morning session, and a gold ticket gets you breakfast and the lunch, the VIP lunch with the partners. And everyone that does that will get access to our eWealth pack, which is $5,000 worth of value. It's got my book, it's got all the white papers, it's, you know, et cetera, et cetera, et cetera. There's so much information in there that everyone's going to get access to. And then lastly, for those that want to have one-to-ones, we do have the ability for people to have a one-to-one with myself, with Garth, or with Hilda. You have to choose between the 3 of us, and it will be an online session, and that's for platinum tickets. We tend to find that high net worth people want to talk about their personal situation, and we've actually set up that. And so for platinum, you'll get the silver, the gold, and you'll get a 1 hour one-to-one in an online environment. And just in terms of the prices, you know, you can literally go, the prices, you'll see that they are live. Everything's in dollars because we are a global citizen. You can see the link below there, or a global company trying to create global citizens. But for today only, we are excited about the 2-for-1 special. I know Lee has put the link into the chat box, but if you are watching the recording, just go to this link and put in this code. But that code will close today. Today is WealthE Wednesday. What is today? The 6th of November. So it will close at midnight GMT time. And then we've got the Wealth Weekend and the Wealth Masterclass. This, to be honest, is one of my most special weekends of the entire year. And this is where we're going to go really, really deep. And again, for our inner circle, it's a 2-for-1 today as well. So unique opportunity for people to participate. And Lee will be putting the details in the inner circle WhatsApp group, the inner circle Facebook group. And if you don't know what the inner circle is, just type in their inner circle and we can give you information. It's, you know, everyone wants to be part of the Harvard inner circle, you know, or the Oxford inner circle. And this is what we call our wealth inner circle. It's the tip of the spear. It's so that you're getting access to the best opportunities, you're learning about the deals, you're getting access to, you know, far more information and knowledge and access to things like this that others just aren't getting access to. So the eWealth Pack will be available to everyone that comes to the breakfast. And that for me, Lyndon, is everything. If we've got any questions, I'll, you know, we can run through the questions. Don't forget the webinar tonight, where we'll be going into a lot more detail, a lot more knowledge. And I've got one comment to make before we go into the questions, which is that if you find this is adding value, you know, I really request that you go out and you let your friends and family know about it. You know, people around the world are concerned. They're worried about where the world's going. They're worried about going into a new decade. They're worried about economic crisis, political crisis, social crisis, technological change. And we are finding ways to empower people. And I really encourage you to share our message and what we're doing with other people. And let them, you know, whether it's coming to a webinar for free or coming to the breakfast, drag them along to a breakfast. You've got the 2-for-1 special. You know, if you want to go even deeper, drag them along to the Wealth Weekend and get them to pay half and come and have an amazing experience. You know, so yeah, I'm very excited about the next couple of weeks. And you know, you also get the opportunity to come and meet our partners face to face and shake their hands. So that's all from me, Lyndon and Lee. In terms of any questions that anyone has. Kathy said the USA wants to do a medical building, so fantastic, Kathy. We can definitely assist you with that. There's a couple of people here that are saying looking forward to seeing RB care homes. There's a number here that have actually said, wow, the London residential opportunity, didn't know it was still available. So yeah, for those that are saying that, this is a unique opportunity for someone that can pull the trigger quickly, just, you know, with it actually closing. And then the last question that has come up here, Lyndon, is around trust. And it's a question we got asked, you know, earlier during the webinar. And it was, you know, what happens? How do we build a trust, and what are the risks from a Wealth Migrate perspective? So, you know, there's basically 3 parts to that, and I'm actually going to expand on the question a bit that people ask. You know, the first question is, what happens if Wealth Migrate goes bankrupt? You know, do I lose my money? The second part to that is, you know, are all the buildings put together? You know, is it ring fenced? You know, or are they all put together? And the third one is, can you run off with my money? And you know, I've extrapolated a little bit on the question, which was how can I, you know, how do I build trust? But I want you to go a little bit deeper into those 3 areas, if you don't mind.
What was the first one?
If Wealth Migrate was to go bankrupt, like how are the deals affected?
Absolutely, I was just teasing. For those of you who don't know Scott very well, there are always 3 things. And internally, we like to tease him about trying to see if he remembers what the first one was by the time he gets to number 3. So what happens if Wealth Migrate goes bankrupt? So that's a great question again. Our SPV, we create a special purpose vehicle, which is a separate legal entity, of which Wealth Migrate is not, we are not shareholders. We don't have a right to what that legal entity owns. That special purpose vehicle is owned by the shareholders in that particular deal. And it is that special purpose vehicle that then invests directly into the sponsor's asset. So firstly, it's important to note you are not investing in a fund. You are directly investing into the bricks and mortar through the legal entity that the sponsor has created. So if Wealth Migrate had to go bankrupt, that does not touch or affect the shareholding that you have in the special purpose vehicle that owns that piece of the building. So the first one is that your asset does not disappear, it does not get lost, you still have it. So then the question, well, is if Wealth Migrate is no longer there to manage it, who will manage that return? Wealth Migrate has an obligation that if it went into trouble, that it would find a new entity commercially to take over the management of those SPVs. Our fee model already has built in, for example, a very small percentage when you get paid dividend. There's a 3% percentage that Scott spoke about, which is there to cover the management costs of keeping these SPVs. Please remember that at the heart of the Wealth Migrate model is that we have simplified and made it possible for you from around the world to invest into these opportunities without having to set up your own legal structures, without having to have your own bank accounts, without having to do your own tax returns in the countries of the deals. We simplify that by creating these structures on your behalf. and those we then also put in place a management team to run those. So even if Wealth Migrate had to disappear, we would find a new person or new company, a new entity to manage those SPVs, and that is all taken care of in terms of within the business model. So firstly, if Wealth Migrate had problems, your asset is not affected because it's in a separate legal entity, and those legal entities have built-in mechanisms to, if we need to replace someone who can just at a very simplistic level manage that SPV. What's important to understand is that neither ourselves or that management agency is actually managing the deal. That is completely taken care of by the sponsor. So if it's an Allvest deal, Allvest is in charge of running the actual real estate asset, the leases, etc. So the role that we play or another agent will play in managing the SPV is actually very simple. It is about receiving the funds that we return, the dividends, and passing them on to you, the investors. And as such, because it is fairly simple, it is not a problem or difficult to find someone else to take over that role and ensure that you are still getting communicated with about your deal, as well as receiving your funds from your deal. I hope I answered that, Scott.
Yeah, the first of the 3 points. So the second one was that, you know, you did answer it, but I just want to reiterate for people is that the deals are ring-fenced. So if you invest in RB Care Homes and you invest in a medical building, they're not all being put together. So you can't rob Peter to pay Paul. And that's really important for people to understand. And the third thing is that we never touch your money. So in terms of the platform, we're a conduit, but we're not actually ever taking your money and sitting in our bank account. And that's really important as well from a risk perspective, because, you know, it's not like we can run off with the money. And just for the record, Lyndon, I didn't just make up those 3 things. That was a question about trust that I get asked all the time. And this person, Peter, asked the question around trust. So I wanted to go a bit deeper because it's actually really important. And those 3, you know, components are critically important. I think we've covered all the questions here. Two other comments from my side, and then I suggest we close out. Is that one is we've got different partners coming next week on top of RB Care Homes. We've got someone that can help people immigrate to America. We've got someone that can help people immigrate to Europe. We've also got a solution coming with a fixed income product where you can earn anywhere from a 7 to 14% fixed income product within the financial space. So there's going to be a lot of reasons to be there next week and to meet people face to face and to understand, you know, what is going on around, you know, finding solutions in terms of the big picture purpose. Lee, before I close out, any comments from your side or anything that is relevant that we've forgotten?
I think that you have covered it all, but I would really encourage you all to go through the links that we have posted in the chat box on the various opportunities that we've had. I've posted the webinars with all of our partners, RB Care Homes, IPS, Allvest, on all 4 of the properties that are available there. Look through them, find out all the information, and then, as Lyndon suggested, maybe it is worth your while spreading your risk or diversifying. So thank you for joining us. It's been great to have you. We really value your time, and we look forward to seeing you on the session later this evening.
Awesome. Lyndon, from your side?
No, just thank you, everyone. It's a real pleasure having you online with us. As you can see, Scott and I are passionate about the opportunities we bring. You know, what you don't know is how many we say no to. So literally in the last week, I personally have said no to about 12 opportunities that have been presented to us that we don't think meet our requirements. And so we're really passionate about the deals that are on the platform, and thank you for being with us and allowing us to share those with you today.
Awesome. Thank you very much, Lyndon. And to Kathy B, you know, I'm in the US and want to participate, saw it on the Money Revealed. You know, Kathy, what I'd suggest is, you know, it's a process where it's one of the reasons we created the Inner Circle. And, you know, we are looking at ways to be able to do it for Americans and to find solutions. It's got a lot to do with the SEC and the Reg S exemption that we use, and the fact that Americans have to be treated differently from everyone else around the world. A bit of a funny story for everyone, for Kathy B and for everyone else. When I went to open a bank account a couple of years ago, I sat down. It was a Wells Fargo bank, which is a big bank in America, and I sat down and the lady had the form in front and she went, "Are you an American citizen or an alien?" And I was like, "Pardon?" And I said, "Are you an American citizen or an alien?" And I was like, I couldn't believe what she was saying. And for an American, a non-American is an alien. And in other countries you get called non-resident. But the point being is that unfortunately for the regulator, they've got a very distinct line between Americans investing and non-Americans investing, and it's called the Reg S exemption. And unfortunately, that creates quite a few challenges dealing with the regulator, which we don't need to go into all those details now. But we are desperately looking for solutions to be able to enable the Americans. But to be able to do that, we will need to have a completely separate offering for Americans under the Reg S exemption. Tell me if I've got anything wrong, Lyndon, because I was with the regulators last week. So that's my understanding.
Yeah, Scott, you're absolutely right. Kathy, I am just writing you a message with my Migrate email. Please reach out to me directly. There is a way if you're a sophisticated American investor, and you might know what that is versus a lot of people who are not based in America. There is a way we can help you in the short term. So please just send me an email and I can connect you and see if we can make that work.
Awesome. So in conclusion, it is a work day. Our social promise is that we're out there. We want to empower 1 billion people. We want to solve the wealth gap. This was actually written by Hilda. As I said, she will be flying out from America to be involved in our events next week. Imagine a world where most or all people are literate, a world where education is par for the course, a world where women are treated as equals, a world where all people have access to investment opportunities. Imagine a world where 6 billion people on the planet who currently live in poverty can live a better life. Imagine that world. At the Wealth Movement, we're aiming to create that world. And every single person that is coming to the event will be participating towards. This is one of the projects we're doing. There's a young man who's been incredible. His name is Bongi. Through crowdfunding, we managed to put him into a private school. I tend to joke with people, there's a good chance he could be the next Elon Musk. And every person that is coming to our events, whether it's the breakfast or the weekend, is contributing in some way to make a meaningful difference on our planet from a purposeful perspective. So if you're not prepared to do it for yourself, do it for others. And from my perspective, that's everything from our side. The next steps are there. You've got the links. Come and join us. Become a global citizen and work with someone who's already done it. And if you're watching the recordings, click on the links below. Lee has, as always, done a wonderful job in putting this all together. So thank you very much, Lee, and to the team of people that are assisting you. And there are Lee's contact details. She runs our whole community and ensuring that we're trying to add as much value to all of you in terms of this process. And then lastly, don't forget tonight. Again, today was about going into the deals. Tonight we're going to go into some really valuable information to share on the 12 principles to success and wealth in terms of where we're going. So thank you for everyone for participating. As always, it's wonderful. Don't forget, today is WealthE Wednesday. There are deadlines in terms of you being able to invest from $1,000, for you getting the 2-for-1 special. It literally is today for people to come to the breakfast, and for people that are part of our wealth inner circle, the 2-for-1 special to come to the wealth weekend. Thank you, everyone. Signing out from my side. Thank you, Lyndon. Thank you, Lee. And thank you to the community for being part of it.
Bye.